Hey, welcome back to Tech Tune-Up. We haven't been together for 10 days, so I have lots to share. A lot of things have happened. Today is June 14, 2024. And in this program, I talk about some tech themes, but then I also talk about some tech stocks, usually revolving around their news, not to regurgitate the news, but to tell you if I should go buy, sell, or hold on that particular security and what it may mean to other securities in its related industry. So let's get to it. I'm going to take a deeper dive in a few minutes into Apple, which is now back to the world's largest market cap stock. The teaser here is I'm not as impressed with their Worldwide Developers Conference AI announcement as everybody else on Wall Street seems to be. So bear with me for a few. Next is GME, GameStop. Now this stock before the meme bounce was at 10. Then with the meme bounce, it went to 60. Now it's down to 27. I called that. And unfortunately, it's still probably many-fold too expensive. So despite what you may think about Roaring Kitty, aka Keith Gill, this ain't a business. Another company that's not a business is Paramount. You may have Paramount Plus on video streaming. These guys also own the legacy broadcast network CBS. Now, the stock had gotten a little bit of a pop because the controlling interest of Paramount, which is Sherry Redstone, was interested in selling this company. And there were a couple of suitors. I don't know why. I think it's a shitty legacy media business. But it looks like at the end of the day, they're not going to be able to reach a deal. And what that tells me is this company, nobody wants it. It's a terminal short. As I've told you many times, short Paramount, short Warner Brothers Discovery, and any of the other legacy broadcasters. And if you want to go into that space at all, hold your nose and just buy some more Netflix. Adobe is interesting. Adobe is a Silicon Valley titan. Company went public in the 1980s, so it's the granddaddy of them all in software. And they had a big pop just this morning after they announced their quarter last night. Now, to put this in perspective, going into last night's quarterly announcement, the stock was down 23% year to date. And the average tech stock was up 22% year to date. And a couple of stocks like NVIDIA had doubled year to date. So here's what I think. I think that this is a dead cat bounce where, yes, you get a little bit of a relief rally because the expectations were so low. So it's easy to step over a very low hurdle. But I don't think that this company has proven that they have AI game. And the only reason you would own this stock, particularly up 15% today, is if you really believed it could successfully transition to the AI model. And you guys know my thesis with this. I believe in continued AI infrastructure building, which is dominated by the hardware guys that make servers and the semiconductor companies like NVIDIA and AMD. They are going to build large language models. Then they're going to run inference, trying to grab some data sets from those models that they can use to develop some software apps. Do not buy any of these legacy software companies just because you think that they're going to jump on the AI bandwagon. I don't know if there's going to be follow through. This would be the ultimate bet from the Kevin Costner movie, right? Field of Dreams. Build it, they will come. I'm very comfortable with the building it because all of the guys that are responsible for building these models, which we call the hyperscalers or the big tech companies, they've already announced their capital expenditure plans. Like Amazon, for example, they're going to spend $60 billion per year on this stuff. I don't know at the end of the day if these AI software apps are really going to be able to move the needle financially for some of those companies. And so everybody says, okay, it's just a matter of time before all of our software companies start to trade like NVIDIA. I don't know if we're ever going to see that. And so Adobe beat their numbers, but again, the expectation was lowered to the floor. They only beat it by a tad. And the other thing that pisses me off about these companies, if AI was so important to your business, why don't you pull it out of your revenues and tell us exactly what the figure is? Tell us exactly how popular your products are. How are they selling? But these companies make these AI announcements and they don't tell us the details. You want to know why they don't tell us the details? Because they're embarrassed to share them. Because if you had something good to say, particularly in the US markets, you definitely would say it. So I'm not a believer in Adobe. Don't think that this company is coming back. I don't want you to definitely buy this stock up 14, 15% today. This, again, could be a dead cat bounce. And if you own some shares, unfortunately, it sucked. But if you do own some shares, maybe you sell it into this strength. The other companies that would be in that same group would be Oracle, who also, I think, had a bit of a dead cat bounce this week on their report. How about Salesforce.com? How about Autodesk? These tech companies from the 80s and 90s. Another company announced this week, Broadcom, and it shared all the details about its AI business, and it is legit, and it is in my AI infrastructure bucket. This company is best known for its semiconductors, and right now, no surprise, a lot of them going to AI infrastructure building, but also it's a part software company, very well managed. The CEO is a guy by the name of Hock Tan, and what he specializes in, he's pretty ruthless, is buys mature software businesses, blows out everybody on the acquisition, and just squeezes for cash flow the products with the existing sales force. You don't need to duplicate the sales force. But anyway, I think that even though Broadcom was up huge yesterday on its news, this one is on my buy list. You can even buy it here. This is a legit infrastructure builder. The next call I'm also pretty proud of is last time we got together, CrowdStrike. We are waiting for its news, but I did have it on my buy list. CrowdStrike is a cybersecurity software company. I think it's the best in this group. But I was a little bit worried going to their quarter last week because all of the folks in its industry, when they reported the results, they disappointed and their stocks got slammed. CrowdStrike goes the other direction, proves it is the best, has a nice upside surprise, and then the stock gets included in the S&P 500 index. Anyway, the thing has exploded. Looked heroic on that one. Still on my list. Still think it's going higher. Everybody knows the news with Tesla. It looks like your buddy Elon Musk did survive, and shareholders, and he claims it was a 70% for vote. I don't know if we'll ever be able to audit that for the truth, but they confirmed his 2018 egregious pay package, which is now worth $48 billion. Now, I will tell you this, even though you're going to keep Elon around, and he is a visionary, you got to give him a lot of credit for his achievements, this still has to go back to the courts. Just because the shareholders say yes, the story is not over. You still have to go to the courts. We'll see. You know that I don't necessarily short Tesla, but I never include it in my buy list, even though it's one of the Mag 7 that a lot of tech analysts follow. I think the company has some real structural issues, and they're going to be in a world of hurt. And even though their stock has been cut in half in the last year or two, unfortunately, I think it's still too high. So let's move on from this segment to my tech stock picks. Here you go. You know my color scheme. Green they're on the list. Yellow, I'm watching. Sometimes I'm watching for their next quarterly announcement to confirm my thesis, kind of like I did with CrowdStrike. Last week when we were here, CrowdStrike there up there in the top in green, it was yellow. Then we had their report after the close on June 4. all these wonderful things happened, including its inclusion in the S&P 500. And so we're to green. Micron, man, I better be right on this when this company announces their results in a couple weeks, because I have been all over the airwaves here and everywhere else, even including television abroad, saying this is my best pick. Keep your fingers crossed, because I could be embarrassed if it's not. Anyway, Micron's my best pick. I'm not going to go through all these because there haven't been many changes, but I would tell you, let's take a couple stabs at the bottom of the list here. Red means it's a stock that if you hold it, I'd sell it. If you are a options trader, maybe I would buy a put. If you're a short seller, maybe I'd sell it, including ARM, ticker ARM. This is the British software company that's actually controlled by the Japanese firm SoftBank. And it's a little bit dangerous to short because it has such a small float. Only about 10% of the shares outstanding after its recent IPO float. The rest is held by SoftBank. So when you have a company with a very small float, it's fairly illiquid. It's kind of dangerous to short, because on any move the other way and the short sellers have to cover their positions, it can cause a hefty short squeeze that, of course, burns you. But this thing is BS. It's another company that's been around forever. Now they're talking about being an AI play. I just don't see it. This company is growing very slowly for a semiconductor company. There's many bigger fish to fry in that space, and I have them all here on my list for you. This is just kind of a investor relations, public relations hyperbole with ARM. So yeah, take a look. The other thing I think is interesting is we could potentially do a pair trade. A pair trade is when you take two competitors and you know in your heart of hearts, one of them is superior to the other. You buy the superior company long, and then you short the equal dollar amount with the inferior or crappy company. And I think we have a nice pair trade here. App Lovin. Did you guys ever see the movie Superbad? Remember Mac Lovin? Here's a company called App Lovin. I'm sure it was that name came from that film. I don't know where else it could have. But anyway, it has a huge, one of the biggest, and this may surprise you, mobile digital ad platforms. It's actually a really good company, super successful. But right now it's trading at a depressed valuation. It's trading less than the valuation by a big margin to Trade Desk, ticker TTD. And they're at least the same company, and maybe AppLovin's better. So I would say go long AppLovin, just for the name. It's funny. And go short either Trade Desk or Unity Software. Unity Software has been an absolute horror show, and that is ticker U. So there you have it. You have a new long idea and a couple of short ideas, and maybe even a pair if you don't want to get too risky and do a naked short. So that is my tech list. You guys, we've been crushing it this year. Portfolio is up about 60 or 70% year to date. Just blown away the market. I've been very good recently, and let's hope that the streak continues. The next I want to do is, because it was all in the news and we haven't had a chance to talk about it because I've been gone for about a week and a half. I want to take a little deeper dive on Apple. Now, Apple, as you may know, had the Worldwide Developers Conference, which started Monday morning. And Monday afternoon, CEO Tim Cook gave the keynote address. Of course, when he was alive, that's something that Steve Jobs did. And he made some AI announcements, which I don't think are that big of a deal. But the way the stock has reacted the rest of this week, people think it's a big deal. But when I take a look at who on Wall Street is going on the air or writing in their research reports about how Apple has just had a come to Jesus meeting, these are the same guys that are homers, that no matter what happens at Apple, they still love the company. They never say anything bad about the company. They're totally subjective and not objective. just like I am with the New York Giants. Every year during training camp, we're going to the Super Bowl, and every year we suck. Don't be a homer. So the homers are saying with Apple that this relationship they now have with OpenAI and also relationship with Google. First of all, OpenAI is a mercenary. They have a relationship with everybody that's not exclusive. Not that big of a deal. But what Apple wants to do is they are desperate because the company hasn't grown for 3 years. They are desperate to sell iPhones because even though the iPhone business is now a smaller percentage of our revenues, part of it is it ain't growing. It's still 51% of the firm's total revenues last quarter. And they want you to buy the iPhone 15 Pro because when you stack up their lineup, it has the highest average selling price, so it's the most profitable. So the whole thesis with Apple, because it hasn't been growing for years, so you have to believe if you buy this stock today at over $200 a share, that you are going to upgrade your phone. And when you go to Verizon or T-Mobile or AT&T to upgrade it, you're going to insist on the top of the line. And so the refresh to have this AI functionality on your phone will cause you to upgrade. And so there's more units there. And at a higher price point because you're always going to be buying the highest end. So right now, OpenAI's functionality, the AI features are only going to be offered on the iPhone 15 Pro, the highest end phone. Okay, guys. So yeah, I think that's kind of a tough sledding because I'm not sure that just because you get AI on your phone and in about 6 to 12 months, AI is going to be on every device in your life. It's not going to be exclusive. It's not going to be particularly cool. If it's ubiquitous like that, do you go out of your way to update a relatively new iPhone and insist on the iPhone 15 Pro, $1,000 to $1,500 for the damn phone, just because it has something that, again, is everywhere? So I will believe it when I see it because the stock has had a big pop on this. And again, build it and they will come. Add AI functionality to your phone and everybody in the planet buys a new iPhone and buys the top of the line. We'll see. But that is the only reason you would own this stock. And I would rather like to see this play out because what happens is Apple introduces their phones in the fall so they can start shipping by Christmas. So we'll see what the take-up is, and we'll probably know pretty early in 25, right? Once we get through the Christmas rush. We'll see. The bulls think that this is going to be the greatest driver in the history of Apple, and they're desperate for a revenue driver. And I say, maybe. I'm skeptical. And because I'm still skeptical, I am not going to bet on it now. Believe it when I see it. And we won't have to wait that long. We're only going to have to wait until we get into early 25. So anyway, I see this happen on Wall Street all the time. The cheerleaders take hold. The homers who can never say wrong have their way. And no matter what Apple says, they think it's the greatest thing since sliced bread. Well, if you follow these knuckleheads, the company hasn't grown for 3 years, and it's actually been a pretty shitty stock. So we'll see what happens with Apple. But I wanted to share my perspective, particularly because my perspective is contrarian. Apple has not and will not be on the Meeks buy list. We'll see what happens. All right. Let's take a look at some tech trends. Yeah, so let's finish up with a couple things I'm seeing that I think are relevant to the tech sector, a bit more on a broader perspective. So since we last met, the Federal Reserve Board has decided, again, to just keep rates flat. The tweak was in the guidance, Back in March, the Fed said they were going to lower rates 2 to 3 times this year. Now they're saying one. And as I get into the fall, I might start to think it's going to be zero. So wrap your brain around the very high possibility that there'll be no interest rate hikes until the 2025. Why do we care? You've heard me say this before. Valuation of tech stocks need lower rates in their discount cash flow valuation modeling. It's 80% rates and 20% fundamentals, all these things we talk about, AI, et cetera. Also this week, I guess to support the future reduction by our central bank for rates, we did have two inflation numbers. The consumer price index and the producer price index for last month were benign, which means they were showing that inflation was a little bit less than what the worrywars thought was going to be. So we'll see. Anyway, I don't think there's any chance that rates go up. That would be really bad. It's just going to be a delay. And as long as you're comfortable saying, you know what, even if the Fed doesn't lower rates this year, I'm cool with it, then I'm cool with it. But just so you know, we got to follow these things. The other thing I thought was interesting is, we've always had this tariff battle ever since the Trump administration between the U.S. and China on how we charge tariffs on each other's exports and our imports. And now the European Union's getting in the mix. And this is a pretty big deal because in the electric vehicle industry, a lot of those Chinese-made EVs don't go to our market, they go to Europe. And you know who this is going to hurt? Tesla, because they build their cars in a lot of places, but big production in China. And so they're Chinese cars, even though it's a U.S. company. And yes, they are going to face a really high tariff when they sell to an important market, the European Union. And Tesla will probably have to raise its prices 30 to 40%. So they don't suffer any profitability with the tariff hike. And then we'll see if they still sell as robustly, because that's going to be expensive in a area in the world where there are a ton of competitors. The next thing I think is interesting. I read a study recently, and remember how my biggest theme, and it continues to be my biggest theme in technology, is the AI infrastructure build, specifically the continued building of these LLMs, large language models. I will tell you this, that there is some interesting information out there that said all of these large language models may be fully built by as early as 2026 and maybe 2030 on the outside. What happens to these AI infrastructure build companies when they've already built the models? So it's going to be incumbent upon me to tell you when to get out of even companies that are doing great right now, like Broadcom and NVIDIA. Because if they are not building large language models, they don't need their chips. That is going to be the greatest call that I'm going to have to make for you over the next year or two. Because when you start to see a deceleration of that semiconductor sales from these major AI accelerator companies, doesn't necessarily mean the game is up, but we're going to have to get out before we have these wonderful triples, quadruples, quintuples, and they round trip. Obviously, we don't want to have a round trip on our investment. So anyway, I think that's pretty cool. And the last thing I want to say, which is half sad and half funny, is you remember a couple years ago, Congress passed the Infrastructure and Jobs Act. And one of the parts of that was they were going to allocate $7.5 billion from the federal kitty. That's a big hunk of change to add 500,000 EV charging stations all around the U.S. I saw something the other day. You know how many they've added so far out of the 500,000? Eight. So anyway, it goes to show you that another real headwind, because a lot of people won't go to the EV market unless they're comfortable that they can find a charging station just like today they can find the neighborhood gas station. Wow. We're pretty far from that, because so far our ramp has been, of course, whenever the government gets involved, it's going to suck. But it's been bad. It's been really slow. So you guys, that's another exciting edition of Tech Tune-Up. I'm here with my buddies at Benzinga, and I'm supported by my own firm back here. If you're interested in tech portfolios, Harvest Portfolio Management. The other thing I would tell you is also watch me on my institutional investor show called Wall Street Beats, because there are some smart dudes, me excluded, that give ideas, fresh ideas, deep dives every time they appear. So you guys have a wonderful weekend, and we will see you next week.